Today, we're going over the 5-step process that every consistently profitable trader uses to manage their trades. And at the end of this video, I'm going to show you 2 exit signals that I've been preaching for years, and I'm even going to show you how they worked for me this week. Hey traders, welcome back to the channel. I hope your trading is going well this week. I want to jump right in and start with step number 1. The first thing that consistently profitable traders do as far as managing their trades, when you go all the way back to before they even place the trade, is they scan the entire market for the highest probability setups. And what you see here on the right side of your screen is a piece of my daily watch list. There's a few pairs cut off at the bottom, but this is basically the whole list here that I go through every single morning to scan the market and see which trades are the most probable as far as within the parameters of my system. Now, step 2, equally as important, is you want to grade the setups that you potentially want to trade. So of that list, you saw some of them were flagged. The flagged ones will then get a grade. This is a B setup, this is an A setup, this is a C potential setup. By giving it those letter grades, I'm using the parameters of my system to weigh the probabilities. We know in trading, it's always about risk reward, and it's always about getting as many of the probability factors in your favor as possible. So when you're going about your trading, whether you're using my system or someone else's system, it should have parameters, checklists, features, whatever you want to call them, that you can go through every single day to qualify or disqualify a potential setup. Now, within those parameters, you want to be able to say, what about this parameter could be better? What about this TDI could be better? What about these EMAs could be better? And by asking yourself that, you're going to lean into finding the highest probability trade possible every single day. And this goes back to something that I see a lot of new traders struggling with. They think that they need to be in every single trade idea that they have, and they don't. Instead, you want to ask yourself again, what could be better? And you want to focus on the most probable trade setup. If you're enjoying today's video, just do me a favor, hit the thumbs up button down below me. It helps me reach other traders in the community and helps spread the value. And if you're not subscribed already, that red button is down below as well. Make sure you subscribe so you don't miss any future videos. Now, step number 3 is probably the most important of the 5 in my opinion, because without risk reward, you can't even click the button. You can't even hit buy or sell. When I talk about measuring risk reward, really what I'm saying is you want to know where are you putting your stop loss and where are you putting your take profit, because trading should be very systematic. And I feel like this gets overlooked a lot. Even in my videos, I feel like it's kind of assumed. I make the assumption, but it really isn't. And I feel like a lot of people don't follow their set take profit and set stop loss. A lot of people don't even have set stop loss and take profit levels for their setups. So let me back up a little bit and just explain to you a little bit about my systems. These are what we teach in our courses. And if you want more information on that, I put links down in the description so you can find out all that stuff. It's down below. Go check that out. With our systems, we'll take the main 3 right now, the A1, the D1, and the D2. Those are the entry signals. When I see the A1 setting up, I give everybody the heads up in the VIP chat. I say, guys, an A1 setup is building on GBP, blah, blah, blah. This is what I'm seeing, this is what I don't like, and this is where I think the risk would be. By knowing that entry signal, built into that signal, I know where my stop loss has to be. If I'm seeing an A1, every single A1 entry, no matter what pair I'm trading, has the same stop loss. Where the take profit comes into play is using the indicators on my chart. If you've seen it before, it's EMAs, TDI, ADR. I'm going to show you here an example in a second, but it's using those indicators to help me find where the take profit should go. Now I know where the stop is, now I know where the take profit is, and I know what letter grade this setup is. Once you have all of that, then you can say your risk reward is ready to go and you're ready to move on to step 4. So keep in mind when you think about risk reward, you should think about it as position sizing based on a letter grade, meaning A, B, and C. Keep it simple. Your A setups should have basically nothing wrong with them. B setups for me have 1 or 2 parameters off. And a C setup will have 3 or more parameters that I just don't like. If you go back to the last slide, 3 or more parameters that could be better. So if I see maybe the TDI could be better, the EMAs could be better, and ADR could be better, those are 3 big indicators for me. If I see all of that, it could be better, that's going to impact the size that I take on the trade. But that doesn't mean I'll stay out of the trade, because if I like the risk reward, I still want to put some money involved. And that's why risk management is so important. That's why everybody preaches it. But a lot of people don't know how to do it the right way. It's not just trading the appropriate percentage of your account. It's being able to grade certain setups and still find risk reward opportunities everywhere and be picky and choosy to put yourself in the highest probability one. So take a look, this is GBP-JPY. This trade presented a risk-reward opportunity, a C setup, with a 23 pip stop loss, but the potential reward was over 100 pips, so almost 5R if I had a good idea here, calling GBP-JPY basically off the bottom. Now this signal was based on our D2 entry, and again, there's information on the D2 signal down in the description. You can hit the links down below. So the D2 signal presented, I measured the risk reward, I knew what my stop would be, I knew what my risk percentage of my overall account would be because I knew that this was a C letter grade setup. And I knew what the potential reward was, as you can see, up near the 800 EMA. Now I was ready to move into step 4. Step 4 is to take the highest probability trade. You might be looking at 2 or 3 pairs, maybe a GBP AUD and a GBP CAD, something like that. You want to be able to ask yourself, which one is better? Look at all the parameters. I use indicators again, and I think that that really helps. So if you're somebody that's against indicators, check out my other videos. I'm going to convince you otherwise. But you can use the indicators to say, hey, GCAD is better than GA. I'm going to trade GCAD because the EMAs are in a cleaner trend. The TDI has been in the buy zone longer. Everything makes more sense to be there. That's where the indicators tell me more probabilities are in my favor. So that's where I want the money. That's how you can use these indicators, even after you've read risk reward, to take the highest probability trade. You can read risk reward on 2 different C setups on 2 different pairs, but then you want to ask yourself one more time, again, what could be better? And you want to make sure that you're putting your money in the highest probability trade possible. You don't want to split your money between both. You want to pick the one, stick with it, and see it through to the end. And that leads me into step number 5, managing the trade through all the way through to the end. If you're taking a position, you now understand that with rules like the way that I've been able to be consistently profitable, with rules like that, your stop loss and take profit are set by the time you see the entry signal. Whether it's A1, D1, or D2, as soon as I see the signal, I know where the stop loss is going to be. I'm then able to use the indicators to measure where the take profit will be, and then I'm done. I leave it alone. I'm either going to get stopped, I'm either going to hit take profit, or I'm going to close it early because I get an exit signal. And that's the only reason to close it early, is if you get an exit signal. And your system should have predefined exit signals like mine does. So I told you at the beginning I wanted to share with you 2 exit signals that have worked really well for me. Well, this is the rest of that GBP-JPY trade that I actually just showed you. You can see from the risk reward idea of the 23 pip stop to the 112 pip take profit, it reached almost perfectly before pulling back down in the last couple of hours or so. And you can see I was actually in this trade here. I showed you I'm up 118 pips almost here. A really nice rip. And again, it was based on identifying the risk reward, finding the highest probability trade, putting my money in, trusting the stop, trusting the take profit, and letting it go. And it worked out really well for me here. Now, the exit that worked really well for me in this trade was not only the take profit level being hit, but also paying attention to average daily range. You see right here, the green horizontal line going across the screen. That's average daily range marked at 106. So as soon as price reached there, I knew it did its average daily range. It moved its average daily range already. So I wanted to make sure that I didn't give back money after knowing it did what it already does on an average day. So I closed a little bit there before we reached full take profit at the 800. But either way, the trade was seen through to the end using good exit rules like ADR max to take some profit and make sure that we follow the trade through as much as it can. Another example, this is earlier this week, Euro NZD. I was able to identify an 11 pip stop loss, potential to go get 21 pips, just about 2R. As you can see, this trade moves just about 21, 22 pips before chopping its way sideways. Now, if we looked at this chart live right now, it is way higher. This is 2 days ago, it's way higher. So we had the right direction, we were just a little bit early. But the exit signal that worked really well for me here was the break of the 21 EMA, right here in this candle that I'm circling with my cursor. When that candle broke the 21, after being up almost 2R already, I knew that I needed to get out of the trade. It was the end of the day. The breakdown of the 21 signaled to me that the short-term trend was done and that I could just take my profit and come back and find another trade. And that's what I did. This was earlier in the week, and then I was able to hit that GBP-JPY trade today and make really good money on it. I actually still have a piece of it on as I'm filming this video. So that wraps it up for my 5, I would say, phases, my 5 tips on how to manage your trade like a pro. Once you have your risk reward, once you know where your stop is going to be, and once you know where your take profit is going to be, the rest should be robotic. If it's an A setup, you should know how much risk that is based on what's in your playbook, what's in your trading plan, and you should take the trade and leave it alone. Manage it candle by candle, watch the candles for the closes, don't exit a trade mid-candle just because you think something's happening, and always keep in mind to close your trades before high-impact news, or at least lock your stop loss and profit so you don't lose any money when that high-impact news comes in and shakes things around. But other than that, measure your risk reward, take the highest probability trade, and let the trade see itself through. So to manage your trades like a pro, you should know where your stop is going to go, you should know where your designated take profit is going to go, and you should be watching candle by candle, only closing early if it gives you an exit signal. Not closing mid-candle. Wait for the exit signal to close as a bar, right? I needed to wait for this 15-minute candle to close through the 21 EMA, and then I took my exit once it told me that it was done. Read and then react. Don't try to forecast. Read the chart, react with your buttons, with your fingers down here on the clicker on the computer. All right, I hope this video helps. If you have any other tips, if you have any other questions, just drop a comment down below. If you'd like to add anything that you think might help a new trader and a struggling trader, please drop a comment down below. We're starting to pick up some traction here, and I really appreciate the time, everybody. I know I talk a little fast. I'm hoping you can keep up and find some value here. And lastly, like I always like to ask, please give me a thumbs up if you're still watching, and make sure you're subscribed so you don't miss any future videos. Once again, I appreciate the time very, very much, and I'll see you in the next trading video.